All right, so let's talk about dividend reinvestment. So when you look at let's say you start investing into dividends, right? And you get like $5, $10, whatever the amount is. You get that dividend payment. You're like, oh, you're super excited about that. Let's say in my first year, this is how you calculate, right? You can always reinvest or you can take the money out. I always choose to reinvest my dividends. So let's say, again, I invest $10K in lump sum, okay, into a dividend stock or ETF that pays 3% in annual dividend yield. And I know this is highly unlikely, but I'm going to assume that there are no capital gains in the $10,000 that I initially invested, just for teaching purposes. So by the end of year one, I will receive $300 in dividend payments because $10,000 multiplied by 3% is $300. So the ending balance would be $10,300 with a 3% total gain with a 3% dividend reinvestment, right? So that's my ending balance, okay? So in year two, I'm going to label that year one. Here we go. In year two, and I say, you know what? I'm going to invest another 10K into it, all right? And that's going to be a total, because I'm going to add 10,300, total at 20,300, okay? And when I get another 3% in annual dividend yield, that's going to be $609, I believe. Did I do that right? Yep, $609 in dividend payment. So by the end of year two, I would have a total of $20,909 totally invested. So I'm consistently getting a 3% gain with the dividend reinvestments every year, assuming that the dividend yield remains at 3%, right? But what if I had a 5% capital loss in the investment? All right, so let's say my investment is now $9,500 from my 10K initially invested because of that 5% loss. Okay, I'm going to make it all fancy. The dividend yield is going to be higher because the share prices have decreased, right? And let's say the annual dividend yield is $2 and the stock price is now decreased from 47.50 a share with a 5% loss, okay? The annual dividend yield will now increase from 4% to, let's see, 47.50 divided by, so that would be 4.21%, okay? How did I get that? And I just do 2 divided by 50, 0.04, that would be 4%, and 2 divided by 47.5, that's the $47.50 in share price that has increased, and that would be 0.0421. Let me know in the comment section if I messed up that math, right? And that would be 4.21%. And just because the dividend yield is higher, it may seem like you're getting more dividends, but the reality is that you have lost the value of your investment while making the same dividend payment. So with a 3% dividend yield, I would have a net loss of 2% in a year. But what if I had a 5% capital gains in the investment from 10K initial investment? Same thing, it will be a $2 in annual dividend yield, and with the $50 market share. So with a 5% gain, what is that? That would be $52.50 per share with a 5% gain, okay? So $2 divided by $52.50, that will give me 3.8% in annual dividend yield, which decreased from 4%, right? So time to panic. Now the dividend yield is lower. No, that's not the case at all. So with 200 shares, multiply by $52.50, that would be $10,500. So I got $500 in capital gains, which is a 5% capital gain. And if I multiply that by 3.8%, quick math, that's about 400, 399. But okay, we'll just say 399. So the total I would have with the dividend reinvestment would be $10,899, or a total of 9% in capital gains and dividend reinvestments. So not only I got a 5% capital gain, but I also got a 4% annual dividend payment. And keep in mind that individual stocks are always much riskier than investing in ETFs or mutual funds. And, just remember, and if this is confusing to you, just go back, rewind a little bit on how this is calculated. Just because the dividend yield went down at 3.8% from 4%, it doesn't mean that you're going to lose money on the dividend payment. Okay, it's just that the dividend yield has decreased because the share price has increased. The best case scenario every year, to me, is that I get capital gains, let's say 5% every year. That'd be awesome, right? And I get 3% in annual dividend yield in dividend reinvestment. 5% capital gains and let's say 4% dividend yield. That's 9% gain every single year. And this is another reason why I absolutely love having dividend investment in my taxable investment account. And I'm going to talk about the early retirement strategy. But before I go to that, make sure you get my financial independence resources for absolutely free. Just go to firesidechat.com/contact.